Tesla pushed over $400 today and held momentarily before selling off. And we heard some news from investor relations meeting with Deutsche Bank talking about the Model Q, or the $30,000 and below model that Tesla is planning to bring to market, potentially starting to roll out in the first half of 2025. Now, this pushed the stock up to highs of $405 before selling off about 4%. Now, at this point, you know that the daily BX is still showing green. This is a sign that our breakout, or our expansion here, is still happening. If you remember, about a week ago, we became bullish on Tesla again short term when that BX, which is the indicator at the bottom of your screen, flipped from red to green. This is an indication that buyers are stepping into the market, and these are the buyers that will actually be able to push the market higher and bid price up. From that point, we are up from highs about 15% to right about now is about 11%. If we zoom out even further to the weekly chart, you will notice as well that that weekly BX trender at the bottom of your screen is still green, has been holding green consecutive for about 8 weeks now. In most cases, this is a sign that this breakout could continue to happen. And when we zoom out even further to the monthly chart, you will notice that the monthly is still holding 7 consecutive months of green. And so as of now, even though we've hit that short-term rejection at $400, I am still bullish short-term on Tesla and of course long-term on Tesla. What would change my short-term thesis is if that daily BX flipped back to red. That would be an indication that price would most likely come back down to test $360 or $340 in the coming weeks before a potential Santa rally at the end of December. With all that said, a lot of people have been asking me if I'm worried on this bigger time frame, such as the monthly, about a potential rejection anywhere between $400 and $420. The reason for this potential rejection is because it is an old resistance level near all-time highs back in November of 2021. But the other reason is because within this level is currently where we have a bearish order block setting up on Tesla. The way that we spot one of these bearish order blocks is by looking near this all-time high area and finding that last candle within the breakout before Tesla started to pull back. So that specific monthly candle that we would want to see is the 1st of November 2021. This indication here of this candle is going to be our order block because it is the last push before price pulled back. This area is very important because it is going to be a prior area of resistance. Institutions had sell limit orders set before. Now, what we're going to do is mark off the high of that candle and then the low of that candle. In this instance, I use a horizontal draw tool, but normally I will take a rectangle tool, go from the high to the low, and then pull it all the way out to where current price action is seated. We could even take another line tool and go to the middle of that order block and pull it all the way out. This area from basically $380 up to $420, or the top half of that order block, is the main area that we will watch for a potential rejection. Now, if we go all the way back to when we had this original order block form back in November of 2021, the reason that this is such a strong area of importance is because you have all of these institutions that wish they would have taken their profits from this rally in 2021 up around 420, 410, 400, and 380. So if we were to look at what price was doing back here, normally what will happen is price will push off of a support level and come back to test 377 to $420. But as we said before, there's a bunch of sell orders sitting within this area. And so when there are more sellers than there are buyers, what normally occurs? The stock is not going to push up into higher highs and will normally reject. That is in most cases going to be the sign of a top. And you can see that when it came back and tested it again in 2021, December and January, it was unable to hold. Now, the older the order block is, the weaker the order block is going to be, which is why I'm not too worried about what's currently happening at this point. Back in 2021, this would have been a strong indication of a potential rejection. But at this point, because it is such an old level and those sellers from back then are most likely not still sitting there all the way out in 2024. Now, with this said, over the past couple of months, since we've been bullish on this all the way back in May and June, we have said that we will remove a majority of our risk between $380 and $400 because if price is going to reject, it will be within this range. At this moment, I am still holding calls on Tesla, but I'm only holding about $150,000 worth of leap calls as opposed to the nearly $1.6 million in profits that we've made on Tesla just this year. And we went over my overall risk relative to my realized returns this year. And even though we have a lot of money in the trade, it's not that much risk relative to what we've already been able to produce this year. So I still think that Tesla has a chance to continue to run to 450, 475, and 500 in the coming months. But I wouldn't be surprised short term if this is actually a top. And in the case of a top, as we said before, I think the worst we would see in a pullback is about $360 to $340. And that would line up with the S&P 500 also showing short-term weakness and a potential pullback. In last week's video, we talked about how we were closing with the weekly showing higher highs and a green BX, which is a very good sign that price is going to continue to run for the coming weeks. So all of that said, we know that if we zoom into a shorter time frame such as a daily, that the same cyclical nature that we have where the stock is going to break out, compress and pull back, and then break out, compress and pull back is going to happen on that smaller time frame. So now we move to the daily chart, we zoom in and take a look at this BX trender, which on the daily now has flipped from green to red. This is an indication not of a potential short, but an indication of a market that we simply do not want to trade. The type of market that I'm always looking to play is when we're trading over the market bias, which you can see in these areas that I'll highlight here. But we want to trade with the overall market bias or trend. But we also want to only be focusing when the BX is breaking out or is showing green. And so now with the BX flipping red, I feel there is a very high chance that price is going to pull its way back down to $600 or worst case, $598 in the coming week, week and a half before finding a bottom and breaking back out to all-time highs. So short term, I'm pumping the brakes a bit as far as being bullish on the market, and we're going to see what happens for the rest of this week. Now, another bearish sign for the market overall is that today on QQQ, our BX breakout bot actually ended up taking profit on the trade, and it looks just like the S&P 500, like our buying environment is no longer here. As we said before, we're looking to see the BX trender, which is the indicator at the bottom of your screen, show a potential breakout. This happens when it flips from red to green, which occurred back here on November 21st. Our trading bot ended up entering a position, which you can see here. And from that point, ended up closing today only because the BX flipped from green to red for a 3.59% return. Now, last time this occurred, price did pull back drastically to test our support level or our market bias, which you can see is sitting here. But even in a best case scenario, most of the time, price will continue to compress sideways or continue to pull back because there's not enough buyers stepping in who can actually push the market higher. So in this case, I do think QQQ is most likely going to continue to compress or pull back, and I am no longer bullish for the next couple of days. Nvidia is down about 2.55% today, and this is another stock that is showing on the bigger time frame institutional selling. Now, if you look at Nvidia on the weekly chart, you're going to see the first thing is that price is currently in an uptrend. The way that we can tell is by using the market bias, which there's a free course going over how to use this indicator and the BX down in the description. The market bias is this gray tape indicator that you see here, and the fact that we are trading over it is a very good sign that we are in an uptrend. Now, what we want to do is, in a perfect world, focus only on trading when price is above the market bias and the BX trender, which is the indicator at the bottom of your screen, is showing green. This is usually a very, very good sign that price is going to break out. And you can see that if we just focused on only trading this type of setup, the past 3 times it presented itself, we would have done very, very well. And if we would have sat out while that BX was red, which you can see in all of the areas I've highlighted here, we would have also not taken any significant losses. And even during the times where we just consolidate for multiple weeks before a breakout, it's not really advantageous or really even worth it, in my opinion, to be risking capital if we know that there's not enough money to actually move this thing higher on the bigger time frame. Now, this leads to the fact that I've been bearish on the daily chart because number one, that weekly is showing that money is getting pulled out. And number two, there's what's called a head and shoulders pattern that is currently forming on NVIDIA. Healthy price action looks something like this. Price breaks out, pulls back because we cannot just always go up. We come down and make a higher low from this previous one. Then price pushes up into a higher high, and then price pulls back into a higher low, and then once again higher high, etc. However, when there's weakness in the market, which we can tell by the weekly chart showing red on the BX, we know that there's normally not going to be enough buying pressure to continue to push the stock once again into a higher high. And so instead, we get a very weak price action or market, which is indicated by what you're seeing currently on your screen. This support level that I'm drawing out right now is called a liquidity zone. This is different than just a double top or a potential support. This is an area that we have to pay attention to because price has bounced there 1, 2, 3, now 4 times. The last bounce was back on the 27th of November. Now notice that price is not making higher highs, higher lows. Price is actually making equal lows. And this is very important because that is an indication, number one, of a neckline. But more importantly, and the real fundamental reason before that, is that it's showing that buyers are not stepping in to create a higher low, which is not a bullish sign. And even worse, it's showing that we're not making higher highs, we're actually making higher lows, which is once again another sign of weakness. If we draw this price action out here, you can see that this initial push would have been our left shoulder. We would have pulled back down into support. This next push into higher highs would be the head or the fake out. We would pull back down to equal lows of that liquidity zone once again. Of course, it's not to perfection, but it's never going to be. And then price doesn't break out into higher highs. Like we said, it actually makes an equal high to that left shoulder. But what's more important is that it's a lower high. This here is a confirmation that the right shoulder has formed. The fact that price did not continue to carry its way up into $150 is a bearish sign. Now, if we look at the BX trender, which is the indicator at the bottom of your screen that dictates buy and selling pressure, what is it currently doing? It's flipping from green to red. This is an indication that selling pressure is entering the market for NVIDIA, which is not a good sign. In most cases, price will continue to sell its way off about another 6% to that support level of $130. Now, if this sells off to $130 and we bounce, that's great. This could be, a couple of months of compressing and then finally that major breakout. But if that area breaks, which unfortunately, we'll see what happens. We're going to have to monitor the weekly as we've been doing once we come down into the support level. But if that breaks, that's where our next level would most likely be down around $120 to $117, filling all these fair value gaps and actual price gaps on NVIDIA. Now, I hope this doesn't happen. If I'm somebody who's bullish, what we need to see here is this support level of $130 to $132 hold, and we need to see in the coming weeks this BX flip back from red to green. While I have been bearish on NVIDIA, I've actually been bullish on AMD, and AMD is down nearly 6% today. And so we're going to talk about if I'm still bullish on this setup, why I think today was actually a stop hunt. I don't think that this is actually going to break through. I think that market makers are just messing with retail. And we're going to go over what my actual plans are for the stock going into the next couple of months. So the first reason that we were bullish on this in the first place is if we go out to the weekly chart and we take a look at this BX trender at the bottom of your screen, you are going to see that this has flipped from red to green. This is normally an indication that price is going to break out, and it's going to break out most of the time when we are in an uptrend. Now, I want to now go back and look at structure. The way that we do this is by taking our resistance level and attaching this to all of the lower highs that are slowly moving their way down in this trend. You will also notice that if we take a support level or a trend line, we can draw all this out to show equal supports. Now, this is why I had a very, very high chance of potential bounce for AMD, somewhere around that $130 to $135 level. So at this point, we have two pieces of evidence that are showing a potential bounce. One is this massive weekly wedge, which normally bounces at this level. And two is going to be the weekly BX, which is showing that on the bigger time frame, institutions are stepping in and participating. And we know that we only want to trade a stock when institutions are also following it because they have the money to actually push the stock higher, which is how you actually make money in the market. Now, we talk a lot about liquidity zones when it comes to this channel and community, and you're going to see that this $135 to $130 level is also a very strong liquidity zone. And we know that in most cases, price is going to come within this liquidity zone and bounce inside of this level. Now, within these liquidity zones, there is a lot of manipulation that happens. And one of the things that we're going to talk about in this video is called a stop hunt. So a stop hunt occurs when we come into a support or resistance level. When we have a strong support like this or a liquidity zone like this, big money and institutions understand that there are going to be people who are looking to buy the dip, much like we are on AMD. They know that they will be looking to take profits probably at equal highs somewhere around 160 to 170. Now, the smart thing and what most people are taught to do in this situation is to go long around 140 and 136 and then do the smart and responsible thing, which I'm not saying that it's not the smart and responsible thing, but the smart and responsible thing to them is to set stop losses within this liquidity zone, because if the stock makes a lower low or breaks that support, then in their eyes, the stock is going to continue to drop. And so what they will purposefully do is drive the stock through all of these support levels, tag everybody out, mainly retail who, have calls or just shares that they're currently holding. And then as soon as it hits that very bottom, they will buy it back up for pennies on the dollar. Everyone is stopped out, and then the stock will completely push back up to end up filling these gaps. Now, will that happen with AMD? I hope so, but who knows? One of the reasons that I think this is a stop hunt even more is because if we go into the 1 hour chart, you're going to notice that we have a megaphone pattern that's occurring. This happens when price is actually making higher highs while simultaneously making lower lows. And as we've said before, that's not normal. Normally, we want to see in an uptrending market higher highs, higher lows, or even higher highs, equal lows, but it's very rare that you see higher highs and lower lows because that's showing that both sides of the market are taking over. Now, the reason I think that this is a stop hunt is because of how quick this drop happened down to 130. Now, I know that Bank of America did downgrade this from a buy to a hold, but in my opinion, that doesn't warrant AMD dropping 6%. Now, I think in the short term that we're going to see AMD this week bounce back up to 134, 135, best case $136. And if that happens and the weekly BX holds, then I think there's a very high chance that this is going to push back up to 160 and 170, maybe even 220 into 2025, which we've been talking about for a while now. And now the final thing that I want to show you, which I think is another thing that's going to bring a lot of confluence to this trade, is the fact that the smart money zone, which is one of the strongest support levels that we have when it comes to trading, is currently sitting at this level. We also know that the smart money zone is usually the main area that they will stop hunt retail in. Now, the way that we find the smart money zone, and we have a course in our community, as well as all of our other free courses, are going to show you how to draw these smart money zones and set these trades up. The link to all of those will be in the description. We take our most recent low on the weekly chart, which is sitting at $122, and we mark off our most recent high, which is sitting at $171 and $36. If we then take a Fibonacci from the low to the high, and we set up our THT fib, which I show you guys in that course, you're going to notice that the golden pocket, which is the 0.786, and the optimal trade entry, which is the 0.826, is currently sitting right where AMD's support is at. This area is called the smart money zone, and this is normally going to be the absolute lowest that institutional investors and big money will drive a price to before allowing the stock to completely recover back up into equal highs and higher highs. And so while I'm focusing on proper risk management, the fact that the weekly is still showing this to me is indicative of the fact that it is not an actual drop, but instead a stop hunt. Now, in this case, can I be wrong? Well, of course I can. But what am I risking to the downside if I end up being wrong? Well, a clear indication of a break would be a drop back down to $123, which is about a 9% downside over the next couple of weeks. However, just back up to that resistance level that we spoke about before, drawn out by taking our lower highs, is sitting right up at about $160. So that is giving us a 1.7 risk versus reward. And in most cases, this smart money zone will play out about 70% of the time. Now, if we play this the way that we were playing that Tesla breakout, then our next target would be up here at equal highs for AMD being somewhere in 2025 up around $220. This type of setup for the next 6 to 12 months give us a near 7-to-1 risk versus reward ratio. And these are the types of trades that I'm positioning myself for as we head into 2025. So I'll let AMD drop below 130. I'll let it do whatever the hell it wants to do. As long as the weekly is holding green, I will continue to remain bullish on AMD. Once that's no longer the case, once it flips back to red, I will walk away from this trade and move on. Another sector that I've been extremely bullish on for the next couple of weeks is China, specifically stocks like NIO, JD, and Alibaba. So let's talk about those now. The reason that I've been bullish on these three is because they are all setting up with the same exact pattern and same exact indicators. You're going to notice, starting first with BABA, that price was in a consistent downtrend for multiple years. And every single time, price was making lower highs. If we go through and we just mark off all of these highs prior to this breakout back here, you're going to notice that the first sign of breaking a prior high would have been this push here at $88.75. Once price finally bounces and makes a higher high, this is what's called a break of structure. And now in most cases, when structure breaks like this, it's an indication that the trend is going to reverse. Now, we know that with anything, it is not going to just go straight up. In most cases, once structure breaks to the upside, price has to pull back down and retest a support. A very good example is going to be Tesla back here in June. We get this initial breakout, price breaks structure, pulls all the way back down to test the market bias, and then this would have been our entry long to the upside. Looking at BABA, we have the same type of setup happen back here in June. Price breaks structure to the upside, pulls back down to test market bias holds, BX flips green, which is our indication to go long, and then we could have got a 12 to potentially 60% return depending upon what you did there with the BX. If you would have just stuck with our actual strategy, it would have only been about 13%, but still a great trade. Now, this massive run that you see here was from the China stimulus plan, which is why we saw a lot of these stocks rally significantly over the past couple of weeks. Now, you will notice that these stocks basically gave back almost all of that stimulus rally. And now we're trading within the market bias, which is this indicator here. You can get access to courses, like we said, for both of these indicators down in the description. And what we want to normally do is look to purchase within this highlighted market bias range. This is normally going to be when we become bullish on a stock. Now, from that point, what is confirmation of that bullishness is for the BX to flip green, which is what's currently happening at this point. Now, my plan for BABA was to turn on all of our trading bots, look to set a take profit at equal highs or higher highs, so we'll say about $120, and set a stop loss when the BX flips back to red or if price closes under $80. With this type of setup, this would give us nearly a 5-to-1 risk versus reward. This type of setup normally plays out to completion about 65 to 70% of the time. So this type of trade is the bread and butter that we're normally looking for every day when it comes to our setups. And you'll notice that the same thing is happening with NIO. And I've been calling this out on X for a very, very long time now. Price broke structure to the upside when we pushed through $5.80. Once again, as we said before, price pushes up into that high. Price has to redistribute and sell back off to test support. And now that we have tested this support, you can see that we have also confirmed the bottom because the BX has flipped from red to green. And much like BABA, the same thing. I'm expecting price to push its way back up into equal highs, probably of about $7 to $8. And I'd be looking to set a stop loss if the BX flips back to red or price breaks $4. So at that point, last week, we had nearly an 8-to-1 risk versus reward. And as we said before, when you have a strategy that wins about 65 to 70% of the time with an 8-to-1 risk versus reward, there's no reason that you should not be consistently profit over the long term. And you can see that JD is also setting up in that same exact manner. I was initially expecting maybe one more pullback to the bottom of that market bias, but so far it has confirmed green. And right now we're up about 10% this week. So I think that this could hit highs of $48 to $50 in the coming weeks if this breakout continues. The last thing I want to talk about is MSTR and crypto specifically. Now, today at about 1 o'clock, we saw an alpha gold flow come through for MSTR, and I alerted our private Discord community. Now, the flow was calls expiring in 2026, so not this January, but about a year and 1 month from now. The expiration or the strike is $620, which is about right now about double what currently MSTR is trading at. And the worth was about $2.7 million. So that is a ton of bullish activity. And the fact that this came through, you can see under details where it says _A, that means that was bought at the ask, which is confirmed bullish. That is not somebody selling a covered call. Now, when we see a flow like that, it doesn't mean that I'm just going to go enter the position and think that the stock is going to continue to run. It's not going to be an entry condition. It's simply going to be another piece of evidence that we can use to discern what's going to happen over the next couple of months. Now, we know that this actual position doesn't expire for about a year. So at this point, I would be looking at the monthly and the weekly charts. The first thing to notice is the monthly chart is still breaking out. The BX turned green 3 months prior. And so looking at this bigger time frame, this is considered a hold, and this is considered to still be bullish. Now, the reason that I'm putting this in air quotes is because this doesn't mean that I'd be starting a position here. The time to start would have been back down here around 158, 200, and 240. This simply would just be a holding mechanism because if we got in based off of that BX flip, we would still be in it. Now, the thing that I just really, really hate about MSTR at this point is the fact that the weekly BX has flipped red. And normally when this happens, price will continue to consolidate for multiple months, or worst case, price will significantly drop to fill this gap of around $290 to $280. If we look at the daily chart, you're going to see the trend is still bullish. We're still over the market bias. The BX is still green. And as long as this support level of 360 can hold, I do think that MSTR could maybe bounce back to 460 or $500. But honestly, I'm not going to follow that flow because of this weekly setup. I don't think the risk versus reward is worth it. I would need price back down at 280 to 240 even to be looking at going long on MSTR personally. But I did want to share that flow with you for anybody who is still in MSTR. And then finally, we're going to take a look at Bitcoin because we've been focusing on CleanSpark, Riot, all of those other crypto miners, but all of them are going to trade off of Bitcoin. And you guys know that last week we talked about we were bullish on Bitcoin back in September because of the BX flip. We have a big bull flag. We're holding the market bias. The BX flips from red to green. And since that call out or since that breakout, Bitcoin's actually up nearly 80%. Now, the weekly BX is now showing red. However, it has not confirmed. We still have 6 days left until the weekly candle closes. So at this point, even though that is showing red, even though it's down 4%, we are still bullish, which means we can come in here on the daily chart and we can theoretically buy all of the dips inside of the market bias when the BX is green. And so at this point, I'm not chasing Bitcoin, but I'm still bullish and it still has my stamp of approval until the weekly confirms a red close. Thank you guys for all the support. It truly means the world to me that you give me your attention each and every single day. And I hope that these videos in longer formats are helping. If you want to get access to all of our free indicators and our 13 free courses, then go ahead and check out our free course library. The link is in the description. Thank you guys for all the support, and I'll see you next time.